Hello and welcome to the channel, where we demystify the complex world of short squeezes and hard-to-borrow stocks. Today, we're diving deep into a specific stock that's caught our attention, ONFO Holdings, Inc. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. ONFO Holdings Inc., trading under the ticker ONFO, operates in the communication services sector, specifically within internet content and information. This is a micro-cap company focused on acquiring and developing internet businesses, operating through both business-to-business B2B and business-to-consumers B2C segments. They manage websites, provide digital services, advertising, and content placement. Currently, ONFO has an estimated float of about 4.5 million shares. In terms of recent price action, it's been a turbulent period. ONFO is down 28.33% today, a staggering 51.14% over the last 5 days, and a significant 85.37% over the last 30 days. What is cost to borrow and why it matters? Before we go further, let's quickly explain one of the most critical metrics we track, cost to borrow, or CTB. When you short a stock, you're borrowing shares from someone else, selling them, and hoping to buy them back later at a lower price for a profit. But borrowing isn't free. The cost to borrow is the annualized fee short sellers pay to hold their short positions. When this fee is high, it signals that demand to short a stock is intense, and the supply of shares available to lend is scarce. A CTB fee over 100% means that, on an annualized basis, the cost to hold that short position would exceed the value of the shares themselves. These fees are paid daily, putting constant pressure on short sellers. Why the stock is hard to borrow right now. Now let's look at why ONFO popped up on our hard to borrow screener. The annualized cost to borrow fee for ONFO right now is an astonishing 1958.5%. Highlight number, that's one of the highest numbers we see, indicating extreme demand to short the stock and / or an incredibly limited supply of shares available to lend out. While we don't have current data on the momentum of this CTB fee or the exact number of shares currently available to borrow, that nearly 2000% fee screams hard to borrow. With an estimated float of just 4.5 million shares, any significant demand to borrow can quickly dry up the supply. Our internal composite squeeze score for ONFO currently sits at 55.6 out of 100, reflecting this high CTB alongside other factors. Squeeze mechanics explained. So, what does hard to borrow mean for a potential short squeeze? Imagine short sellers betting against ONFO. They've borrowed shares at a 1958.5% annualized fee. If the price of ONFO shares were to start climbing, these short sellers face a double whammy: their positions are losing money and they're paying exorbitant daily fees. This creates immense pressure. To stop their losses and stop paying these fees, short sellers must buy back the shares they borrowed. This buying activity, known as short covering, can push the price even higher, forcing more short sellers to cover, creating a cascading effect that's the essence of a short squeeze. With ONFO's relatively small 4.5 million share float, any significant short covering could have a magnified impact on the share price due to limited supply. However, it's critical to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock will continue to fall, and they're willing to pay the high fees to maintain their position. Dilution risk check. One major factor that can completely negate a short squeeze thesis, even with high CTB, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically reduces the value of existing shares and provides more shares for short sellers to borrow, effectively removing the hard to borrow pressure. For ONFO, we've checked for recent dilutive SEC filings like SMINUS1, SMINUS3, or 424B over the last 90 days, and we found no recent filings that suggest immediate dilution risk. This is a positive sign for any potential squeeze scenario. Recent reverse split watch. Another important recent event for ONFO is its reverse stock split. ONFO executed a 1/4-50 reverse split on 20/6/8/10, which was just today. A reverse split reduces the total number of shares outstanding and proportionally increases the share price. For example, if you own 50 shares at $1 each, after a 1/4-50 split, you'd own one share at $50. Historically, for many microcap stocks like ONFO, a reverse split can reduce the float and reset the share price higher, sometimes leading to renewed volatility or a price pop within about a month after the split. This isn't a guarantee for ONFO, but it's a pattern we've observed in some names, and it adds another layer of complexity to its current situation. Let me remind you of our disclaimer. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For ONFO, with its 1958.5% cost to borrow, small 4.5 million share float, and recent reverse split, here's what we'll be watching. We'll be looking for continued high CTB fees and any updates on shrinking shares available to borrow. Volume is also key. Today's volume for ONFO was 919,002 shares, but its 30-day average volume has been 45,647,220 shares. This means today's relative volume is effectively 0x its average, indicating extremely low trading activity compared to its historical average. Any significant increase in trading volume from these current levels, especially if accompanied by positive price action, could signal increasing interest. We'll also monitor how the stock behaves in the coming weeks following that reverse split, given the historical tendency for some microcaps to see renewed volatility. ONFO presents an intriguing case study with its exceptionally high cost to borrow and recent reverse stock split. While the conditions suggest it's a stock to watch, always remember that high CTB alone doesn't guarantee a squeeze. Short sellers may have strong reasons for their convictions. Do your own thorough due diligence, understand the risks, and never invest more than you can afford to lose. If you found this deep dive helpful, please like this video, subscribe to our channel for more content like this, and let us know in the comments if you're watching ONFO or have any questions. We'd love to hear from you.